$1.2 trillion in a single quarter? The mega deal is officially back.
Is it? Transaction volume is actually down 17%. You just got distracted by Unilever dropping $44.8 billion to corner the global paprika market.
Don't disrespect the McCormick spice empire. But it's not just mayo and spices. 4 of the 6 biggest deals are pure AI infrastructure grabs.
Which is exactly why we need to check the footnotes. Let's see if those tech premiums actually hold up. The rundown. $1.2 trillion in a single quarter. I'm looking at the Q1 data and my spreadsheet is physically sweating.
Deal volume is actually down 17%. But the sheer size of these checks is wild. We're officially back in the mega deal era.
Buying for capability, not just cheap liquidity. That's the analyst consensus right now. And you see it perfectly in the Ecolab deal, $4.75 billion for CoolIT Systems.
A water and hygiene company buying a data center cooling business. It sounds like a corporate mad lib until you think about the AI angle.
Exactly. 4 of the 6 biggest tech deals this quarter were AI-driven. Everyone is scrambling for data infrastructure. Ecolab just bought a massive backdoor into the AI boom.
Speaking of massive backdoors, how about GIP and EQT teaming up to swallow AES Corp, $33.4 billion?
I read the preliminary filings. Cross-border dealmakers are going to be sweating bullets trying to get that past regulators.
Oh, come on. It's an infrastructure play. They're just securing the grid. It's a perfectly logical energy transition bet.
Logical? Nate, they're paying a ridiculous premium for an aging utility just to say they have a green portfolio. Anton buying Sapphire Gas from Apollo makes sense. $33 billion for AES is just 2 infrastructure giants with too much dry powder getting desperate.
Spoken like a true skeptic, I think you're vastly underestimating the value of hard assets right now.
Maybe. But I definitely understand the value of tech bro meal replacements. Danone just bought Huel, $1 billion flat.
Wait, really? The beige sludge that software engineers drink so they don't have to stop coding to chew?
That's the one. $1 billion for powdered protein.
I guess Danone wants a piece of the health optimization market. My old MD used to survive on that stuff during pitch seasons.
Your old MD is probably buying into the leveraged finance market right now. It's completely red hot. Electronic Arts just raised $18 billion in debt financing.
$18 billion for video games?
Twice oversubscribed, investors are practically begging to give them money despite all the boardroom anxiety out there.
That's banker heaven right there. Capital is just flowing, even in the boring sectors. Zurich Insurance just dropped $10.8 billion to swallow Beazley.
Specialist insurance, not sexy, but incredibly smart for expanding their global footprint.
Right, but speaking of massive numbers and things people eat, we need to talk about the real crown jewel of Q1.
The spice rack monopoly.
Unilever dropping $44.8 billion for McCormick. I want to know exactly how antitrust watchdogs are going to look at that one right after the break. The big one. $1.2 trillion in a single quarter. The mega deal is fully back from the dead.
Hold on, you are burying the lead. Yes, deal value is up 26% year over year, but transaction volume dropped 17%. This is not a broad market recovery. It is just a handful of massive whales masking a very quiet ocean.
True, but what whales they are. We have to talk about the crown jewel here. Unilever combining its food arm with McCormick. $44.8 billion. It is a masterpiece of corporate re-engineering.
Masterpiece is doing a lot of heavy lifting there. I read the footnotes on the pro forma projections. Unilever is essentially admitting their legacy food brands are stagnant, so they are buying the spice aisle to artificially inflate their margins.
Oh, come on. That is incredibly harsh. You are missing the big picture. They are buying for capability, not just defensive scale. McCormick gives them incredible pricing power. This is exactly what the analysts are calling strategic reactivation.
Strategic reactivation is just banker speak for we ran out of organic growth ideas.
I feel personally attacked, but seriously, look at the logic. You do not spend $44.8 billion just because you are bored. They see a global distribution network that can push Old Bay and Hellmann's through the exact same supply chain. It is beautifully efficient.
A beautifully efficient supply chain that antitrust regulators are going to tear apart. Cross-border dealmakers are already sweating bullets. Have you looked at the regulatory timelines lately? Labyrinth is an understatement.
Regulators are tough right now, sure, but the financing markets do not care. They're practically throwing money at these mega deals. The leveraged finance market is absolutely red hot.
You are talking about the Electronic Arts debt package.
Exactly. $18 billion in debt financing, and it was more than twice oversubscribed. Investors are starving for yield. If you can get the deal past the watchdogs in DC and Brussels, the money is waiting at the finish line.
That is a massive if. I am betting we see at least an 18-month review on Unilever McCormick. You cannot just mash the mayo and the black pepper monopolies together without someone in Europe having a panic attack.
Mash the mayo and the pepper. Very culinary of you. But speaking of massive combinations, we also had infrastructure giants GIP and EQT teaming up to swallow AES Corp.
$33.4 billion. Now that one actually makes sense to me.
Really? The skeptic likes the $30 billion utility buyout?
I do. Because energy transition is insanely capital intensive. You cannot do it with standard corporate balance sheets anymore. You need infrastructure giants to actually foot the bill for grid modernization.
Exactly. It is like fixing a city's plumbing. You do not hire a guy with a wrench. You hire the entire water department. GIP and EQT are the water department.
Your analogies are getting worse today.
I thought it was solid.
It really was not. But speaking of plumbing, we need to talk about the infrastructure everybody's actually fighting over right now. Because AI just drove 4 of the 6 biggest tech deals this quarter, and the valuations are completely unhinged. Voices. I keep seeing this phrase floating around the analyst notes this week. Strategic reactivation.
Oh, I love that one. It's pure banker poetry. I'm totally stealing it the next time I need to sound smart on a call.
It's completely meaningless. They're claiming the M&A landscape has shifted from valuation correction to buying for capability. But if you look at the actual data, it's just FOMO. Pure and simple.
I completely disagree. Look at Ecolab. They're dropping $4.75 billion on CoolIT Systems. That's the exact definition of buying a capability. They need data center cooling. They bought the guys who do it.
Sure, Ecolab makes sense, but analysts are using this spin to justify the entire AI buying spree. 4 of the 6 biggest tech deals in Q1 were just frantic scrambles for data infrastructure. That's not strategic reactivation. That's panic buying because you're terrified of getting left behind.
Panic or not, the leveraged finance market is eating it up. Did you see the Electronic Arts debt package?
The $18 billion one?
Yeah, it was more than twice oversubscribed. Investors are starving for yield and they don't care if it's a panic buy or a strategic masterstroke. The money printer is fully operational.
The lenders might be happy, but the regulatory lawyers are sweating. The cross-border deal makers I'm talking to are terrified right now, especially in semiconductors and fintech. You can raise all the debt you want, but good luck getting it past the labyrinth of global watchdogs.
Speaking of things that are hard to swallow, Danone just bought Huel for $1 billion.
Wait, really? The tech bro sludge?
The very same. $1 billion for drinkable beige?
That's incredible. I desperately want to read the fairness opinion on that one.
I'll dig it up. But speaking of those global watchdogs, we should probably look at how antitrust is going to handle this $33.4 billion AES buyout tomorrow. Spill the tea. Did you see the order book on that Electronic Arts debt raise? $18 billion, and it was 2 times oversubscribed. People are throwing money at gaming like it's a regulated utility.
I did see it, and I actually read the covenants. It's wild. They're practically handing them the cash with 0 guardrails. But honestly, I think half those investors are just desperate because the cross-border deals they actually wanted to fund are completely stalled out.
Oh, come on. The leveraged finance market is just red hot right now. Investors are hungry for yield. It's not just sloppy seconds from block tech deals.
Nate, it absolutely is. Talk to anyone in semiconductor or fintech M&A right now. They're sweating through their Patagonia vests. You try getting a cross-border chip deal past regulators today. It's a complete labyrinth.
Okay, fair. The boardroom anxiety over geopolitics is real, but you can't tell me this shift is entirely negative. Analysts are calling it a strategic reactivation. Buyers are acquiring for actual capability now, not just cheap liquidity.
Did you seriously just quote a sell-side analyst note at me?
I might have. Old habits die hard. I'm just saying, companies are terrified of missing out on AI data infrastructure. They have to move.
And I'm saying they're overpaying to soothe their own anxiety. But speaking of anxiety, I really want to see the sweat on the antitrust lawyers' faces tomorrow morning.
Oh, you mean when the watchdogs start their preliminary reviews on the Unilever McCormick merger?
Exactly. $44.8 billion of spices and mayonnaise. I'm bringing popcorn to read those early regulatory filings.
We'll save some for me because we need to talk about how that mega deal is going to pressure the mid-cap food guys next. Tomorrow's radar. I am watching the antitrust dockets like a hawk tomorrow morning. Regulators are going to have an absolute field day with this Unilever McCormick merger.
You really think so? It is literally just soup and spices, Nate. I am way more focused on the cross-border semiconductor filings. That is where the actual boardroom panic is right now.
Soup and spices? Maya, it is a $44.8 billion grocery cartel. Regulators absolutely care about the grocery aisle.
Fine, but the real ripple effect tomorrow is tech. Mid-cap companies are terrified right now because they completely missed the Q1 AI buying spree. They need strategic partners yesterday.
True. 4 of the 6 biggest deals this quarter were just companies panic buying data infrastructure.
Exactly. They are buying capability now. And keep an eye on the debt markets. EA just got their $18 billion debt financing twice oversubscribed.
Twice, investors are just blindly throwing cash at leveraged finance again. I really miss those banking fees.
Which means we are going to see even more of these mega deals funded tomorrow. Get some coffee, Nate. The filings drop at 6 a.m.